1MDB's Board of Advisors, headed by PM Najib, will be dissolved. The Ministry of Finance Inc., which is the scandal-hit fund's sole owner, says it also has accepted the resignation of the Board of Directors with effect from May 31st. It will appoint new board of members to reflect 1MDB's limited business profile, but Arul Kanda will remain as the company's president until further notice. He will continue to focus on 1MDB's rationalization plan, which will include the resolution of the dispute with Abu Dhabi's IPIC. Meanwhile, the ownership of Bandar Malaysia, TRX City, Air Itam Lands and Pulau Indah Land will also be transferred from 1MDB to MoF Inc. The changes follow recommendations made in the Public Accounts Committee's report on 1MDB released last month. Ambank stock has been in the doldrums, particularly for the past year or so, and its biggest shareholder, ANZ, believes that 1MDB has been one of the factors. CEO Shane Elliott admitted for the first time that the state fund, together with the Malaysian economy, has had an unquestionable, if indirect, impact on Ambank's share price. The local bank stock has been trading below 5 ringgit for the last 9 months. ANZ has cut the value of its 24% stake in Ambank by almost 20% or 260 million Aussie dollars. It refused to reveal how much money Ambank had on loan to 1MDB. Malaysia's GDP and budget deficit target will stay the same. Now, even though crude oil prices have stabilized at around $45 per barrel, Treasury Secretary General Irwan Seriga says it's still too early to say if this price will remain this stable for long. He adds that US shale oil and gas producers may return to the market as prices go up. Malaysia's 2016 budget was based on crude oil prices averaging $35 per barrel. As for fiscal deficit, Irwan says higher oil prices means more headspace for the country to undertake more programs and projects. GDP-wise, this year's targeted growth was set between 4 and 4.5%. CPO prices in the second quarter are expected to rise according to RAM Ratings forecast. The agency says prolonged bad weather has hampered output, which will alleviate inventory woes and support CPO prices. Prices are expected to average between 2,400 and 2,600 ringgit per ton. Previously, the forecast was set at between 2,300 to 2,500 ringgit per ton. However, prices will ease slightly during the industry's traditional peak production season. RAM says competition from soy oil and a stronger ringgit could also weigh on the commodity's price appreciation potential. Anyhow, despite the slowing down of key consuming nations, RAM foresees that the palm oil market will remain balanced by anticipated lackluster production growth. AirAsia is axing its Bali-Kota Kinabalu route from June 23rd. The carrier says efforts to make the route a success were hampered by stagnant market growth, and revenues were just not enough to cover the costs. After having been forced to move its operations from Kota Kinabalu International Airport's Terminal 1 to Terminal 2, AirAsia claims its operational costs have also increased quite substantially. The airline says it's high time the Sabah capital got its own dedicated low-cost carriers facility. It is forecasting 12 million passenger arrivals and departure into KK per annum by the year 2021.